folks. This live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, good afternoon, good evening, wherever you are in the world. Hope you guys are doing great. Welcome back.
Good morning.
Ariel Fx.
How are we?
Got my coffee. I'm ready to go. As always, you guys know what to do. Where are you guys from? What pairs are you looking at this morning? We have a big news event today. I believe it's FOMC. That's what it is. Yep, FOMC statement, federal funds rate, press conference. Going to be very, very volatile today.
Yep. It'll be a massive catalyst for the US dollar, really across the board in the markets, as we really have been choppy as of late. And so this is an excuse to have that volatility injection and likely probably see rate hikes again, probably 75 basis points. But what do you all think is going to happen today with the news? Let us know in the comment section. Is the dollar going to strengthen or weaken, in your opinion? J Red. Yeah, bro. USJPY buys. Got equal highs. It's in a bull market. I don't see why not. You're expecting to weaken. Okay.
Profits in your hint from EJ. Yep, definitely. I sent EJ out yesterday. Was it yesterday? I sent a re-entry on EJ and the original entry I've talked about for the past few weeks. Got both of those entries. Both of them are in really good profit at the moment. So yeah, awesome. Glad you caught it. Michael Torres called you out, Ariel Fx. I'm not sure who that is.
Put the words together.
Michael Torres. Come on, guys. Let's grow up here.
Jesus. Yes, FOMC is actually, I think isn't it 6 hours from now? 2 o'clock?
Yes, yeah, 2 p.m. to 6 hours from now.
Yep. So, if you're in positions before then, obviously we always want to make sure we're covering ourselves and mitigating as much unnecessary risk as possible prior to an event like that. Jen and Jared, what's up? What's up? I remember you from last week. Thanks for hopping on. Where's everyone from?
Yeah.
We've seen anyone in here.
It was like a little icebreaker to start the day. Halfway through the week already, man. It's already flying by.
Crazy.
We are in a really good profit for the week. I will be going over some trades that the VIP community did take. I'll also be going over some other setups for you all today, but really it's just going to be a chill session. Just want to talk to you all, kind of maybe get to know you guys a little bit more. I see a lot of familiar names here.
Yeah.
So it's always nice to, just to sit back and talk. I'll definitely provide some value today, but if you guys have any questions at all, or just want to speak, be more than happy to just kind of chill here for a little while.
Let's see, we got Sydney, nice. Croatia. Oh, I've always wanted to visit Croatia. Dubrovnik. I think that's where Game of Thrones was filmed, I think. South Africa, Zimbabwe. Wow, nice. Sri Lanka. Another Zimbabwe.
Optimus Prime. What's up? Kenya. Awesome. Zimbabwe, England, Morocco, Portugal. I love the diversity here, guys. I like, everyone's from different parts of the world. It's awesome. Everyone's trying to learn here. India, Fort Lauderdale, Florida, Spain, Philippines. 75 basis points or full 100.
Well,
I don't know. 100 would be a lot. I would say at least 75. But at the end of the day, I mean, how would that impact the trades that we're currently in? So going back, I know there was a question about news. What is a strategy for trading news time? There is no specific strategy for it, and I would highly recommend you not try to trade news on its own. News, again, like Aiden said before, is just the catalyst to move price in its overall direction. It's to do what the market was going to do anyways. It was just the excuse to influx volatility into the market to move price quicker. So I'll go over an example here when I share my screen in a minute. Of why news comes up to specific levels that are valid levels that we were actually looking at trading and then moves away from them. So it's not just random price movement. It's everything is pre-planned. So the news is just that catalyst for volatility.
I think that's the misconception, is that there's not a strategy to trade news. It's not like those people on YouTube who you see, place buy stops and sell stops, 10 pips above and below price prior to news and then below their account, live. You always get a kick out of those. It's not that, right? It's we're simply following the technicals and trusting that the news is just going to be the excuse.
Think about it, guys. I mean, let's put our professional trading caps on for a second. Who is moving the markets? As you guys know, if you've been on any of my live sessions, you already know that the institutions move price, right? They have the billions to influx. We do not have that kind of capital. So do you think that those institutions are simply placing their sell stops and buy stops 10 pips and above and below? I mean, come on. I'm not trying to be a jerk here. I'm just trying to be realistic. But that's not what they're doing at all. They don't do that. They don't trade price. They are the market makers. They're the ones making the market. So they're not actually trading it, like looking at it and being like, oh, when can I get into the market? I mean, they are doing that, but they're always mitigating orders. They're mitigating prior orders. They're making the market efficient through imbalances. They're sweeping liquidity, freeing up liquidity so they can enter into their positions. They're not trading like retail. They don't trade like us. They have their own. They're market makers. They're the ones making the market. They were providing the liquidity for a price to be traded. So there's no such thing as trading the news, because that's not what they're doing. So why would we do what they're not doing? See, that's why we're very profitable, because we follow along with what they do and we understand how they move price. So you have to think about it like that.
See what else we got.
London, Sydney, Kenya.
Tanzania. I forget how you pronounce it. Nice. More Kenya. Nice.
What is the strategy in trading in news time? I think we just went over that.
Yeah.
How much you guys want to trade?
Coffee. Wake up.
1% or lower. I hardly go really 1% anymore. I don't need to. I mean, when you grow your account to a certain place, 1% even becomes a lot. You don't need to even be risking that much. But a lot of people, especially beginner retail traders, they have $100 accounts or $1,000 accounts at most. So they think that 1% risk is nothing because they may make like $5 on a trade, which is still very good on a $100 account. That's 5%. So if you can't manage a $100 account, you're never going to be able to manage a $100,000 account. So you have to be building that habit of using good risk management. So no more than 1%, usually about 0.5%. How's the competition leaderboard look? Yeah, I'm going to be posting the leaderboard this weekend. I'm going to be posting that to my Discord channel. So I'm going to post the Discord link in here for those of you who don't have it. You will find it. Here we go. Sorry, I couldn't find it for a second. I risk 0.5%. Yeah, that's good. Perfect. Kingston, Jamaica. I was in a couple years ago. I was in Ocho Rios. What was the other place I was in? I was in another area.
I always wanted to go.
There. Yeah, it's a beautiful country. Although I was surprised to, well, actually, I guess I wasn't surprised that when I was walking on the beach, there were people trying to sell me stuff and stuff. You know what I mean?
Like the Bahamas.
Yeah.
Zimbabwe again. Nice. All right, cool.
But it's cool, guys. You know, Jamaica is an awesome place. Very nice people there. Very kind. See, Nigeria. Awesome. All right, guys. So we'll get it right into it. We've already taken up about 10 minutes. So I'm going to go over a few pairs. I'm going to highlight what we have been taking this week. I'm going to go over a few setups for you all today. And then, you know, it's all on you guys. You know, you ask the questions that you want. We'll just chit chat and talk. And, you know, we want to, you know, the whole purpose of these live sessions is to not only teach you guys, but to, you know, help you in what you're personally going through, whatever, if it's a struggle, if it's a question that you have that you need clearing up, you know, that's why we're here. Awesome. So let me just share my screen here. Perfect. Perfect. All right. Can you guys see this screen and hear me?
Yeah. Gotcha.
Good. Okay. Perfect. All right, let's do it. Canvas mode. Here we go. All right. So I'm just going to quickly go through just a couple of pairs here. You know, I'm looking for further downside really across the board on XXXJPY. We are higher time frame bullish on these yen pairs or XXXJPY pairs. So we do have to take that into consideration. The news event may push price higher. However, I would like a further retracement. But we can see here we are coming into demand, right? So we have hit this level. I was looking for original shorts from our lower time frame supply zones. So we just have to kind of be patient with it. I'm still interested in shorts from these supply levels. However, you know, we are higher time frame bullish. Excuse me, I meant bullish. If I said bearish, I meant bullish. So we just have to understand that that's where the market is headed, higher time frame. We haven't really hit our overall objectives yet. So if we're looking to trade counter trend, as long as we have all of our setups or confluences there and all of our rules are met for this particular trade, then we can take it. But having the understanding of higher time frame structure, we really want to be being careful and using good risk management for it. So I'm liking these two levels. I want to see how the news event, what the news does today. You know, going back to, you know, what the news does and going into NZD USD really quick. So this is a trade that we took with our VIP community on the 13th of September. So last Monday, I believe. Was it Monday? Okay. Maybe I'm lying. When was it? 13th. Last Tuesday. Anyways, really what this was, and just a quick analysis as to following the mitigation train here. Really, it's quite important that you understand each and every level of price. Higher time frame, we're in an overall downtrend. This is just a higher time frame pullback. We're expanding again to make a lower low. Now, since we have distributed in a higher time frame level and broke the structure, now we're not only higher time frame bearish, but lower time frame bearish. So we can see here, this is the Asian range. Fake out of the Asian range, entice sellers. Push back up, take their stops. Break out of the Asian high, entice buyers. Come down, take their stops. Huge institutionally sponsored buying volume before the sell-off. So that's exactly where we come into, and we took that trade and we sent that out in our VIP community. Wick entry, beautiful, beautiful trade. What's the counter trend? High, low, failed to make a higher high, lower low. So this becomes our supply, that flip from this demand to supply, because we failed to generate a higher high in this market structure sequence. Obviously, that's what we were expecting because we already mitigated our order. So we wanted to go short. So we ended up coming back up, sent this one out as well, had that mitigation. In the process, we swept liquidity, equal highs, boom, buy to sell. On the 15-minute time frame, we, again, failed to generate a higher high. High, low, pushed up, failed to generate a higher high, and then rolled over, made a lower low below that previous structure point. So this becomes a level in which we want to be selling from. Okay, so pull back up into that level for shorts because we've already mitigated our level. So now we're probably going to go short now, and we broke the counter trend structure. This was our last push to the upside that failed to create a higher high. So we just zoom out. Price makes an overall lower low. We finally rally back to the upside. Okay, create equal highs relatively, and then tap into this level. Now, what is this huge push to the downside? This is our CPI news event on Tuesday. I think it was CPI. That may be wrong, but I know there was a US dollar based or USD news event that affected the US dollar. So US news event that occurred during this time. So notice how the news events are structured at specific times of the day. USD 10 a.m. This is the New York session. FOMC usually takes place in the afternoon, but most likely, CAD news. This is the New York session pair, 8:30 a.m. Eastern time. That's New York session open. Chef, Euro, pound, all in 2 a.m., 3 a.m., 4 a.m. These are news events that happen at these specific times. This is London session. So understanding that, they can take news events during the right session and use that as the catalyst to move price lower. So we were always meant to come up and mitigate that supply level. If there was no news, price would have done the same thing, but just maybe taken it a little slower, right? But overall, that was the level in which they had to mitigate. So that's where we went short. So if you placed your buy stops here and your sell stops there, yeah, you would have lost on your buys, but yeah, you could have won on your sells, but price could have went like that as well. Maybe have gotten back into their positions, meaning they may not have been able to get into all their positions here. So they had to push price back up, get into more, push price down, push price back up, get into the rest, and then finally make the move. But since you're stuck trading this huge range, and in this case, obviously we just totally tanked. But if price was going like that, you probably would have lost a lot of money in doing so. Also, would you have known to place, like if you placed a buy stop there and a sell stop there, yeah, fine, maybe you'd be in profit here. But if you're losing here because you're buying and price is tanking, well, you're not making that much money, right? You're probably breaking even. But still, that's not the right way to look at the market at all. You have to know the levels. If you understand the levels of supply and demand, where we need to come and mitigate price and mitigate prior orders, you're going to know to place just a sell right there. Right? That was the level. That's why price stopped, and the institutions used the news as a catalyst to drive price further, which it was always meant to go. And we finally, I think, hit our take profit yesterday. Yeah, we did. So that was for a 1 to 7. So we can see how news just doesn't matter. It matters, but it doesn't. In terms of technical analysis, it's only used to move price in the correct direction of the market, or to mitigate orders, to take liquidity, but overall do the same thing that it was going to do even if there wasn't any news. So hopefully that clears up any confusion there. All right, CAD JPY. Aiden called this one out. I think last week. There was a 12-hour candle here, just creates demand. We're in a higher time frame uptrend. We have two levels, this demand here, this demand here. We're currently in profit here, but if we come down a little bit lower, we may push down into 106 and have that level be met and go long, because we still are very much bullish. If we have a higher time frame retracement, you can see here, higher time frame, we may come into 104, 103.52, or 103.2, 150. This is just imbalance fill, prior demand in which we, swept liquidity, pushed up, failed to generate a lower low, and then continued. So this is probably our higher time frame demand. Okay, so we could have that overall retracement, but for the short term, we could easily, if we don't pull back hardly at all, we could definitely react off these valid levels of demand to go long. So we're still, in profit right now. looking to hold. Euro AUD. This is looking really nice. We had a Euro AUD buy 2 weeks ago. Already hit take profit for 1 to 5. And then we had our higher high, higher low, higher high. We're just pulling back, right? Higher time frame. We're in an overall downtrend, I think. If I'm not mistaken. Yeah, we are. Higher time frame downtrend, but we want to be getting back up into prior higher time frame supply right in here. We want to be pushing back up into this region of supply. So if we already go short, we probably need to go short from this level. But since we haven't hit that level yet, any buys counter trend, since we're now counter trend bullish, are still valid until we come back up and hit that level. So we can see we created a higher high, generated liquidity prior to coming into these levels. Notice how that works. Also, retail head and shoulders. Shoulder, head, shoulder is probably another shoulder, head, shoulder, whatever you want to call it. Doesn't matter. It's just consolidation. It forms buy side liquidity to be run later, but sell side liquidity, when people are buying 1, 2, third touch of the trend line, fourth touch of the trend line, they come and sweep their stops. And then they go long and take buy side liquidity. So that's what they're going to look to attack next. So this is a beautiful trade that may come a little bit lower, may come down deeper into discount, into demand, and into imbalance. So really the range is from this low, because this is the low that created this high. So really, we're hitting the 50% now, just in case we just had a very small retracement, higher time frame, right? Because expansion, retracement, expansion. We may come a little bit lower, but still maintain market structure, which is why we have 2 levels. So fine, price may come a little bit lower than this demand, but really in all reality, we really should be going long from either one of these 2 levels. This gives us the highest probable chance to make money. We're counter trend bullish. If we already go short, we have to at least come up into here, probably 1.51. So we're still bullish until we hit this objective level. And objectives are very important, right? If you don't have objectives, how do you know where to take profit? How do you know where the higher time frames could potentially reverse on you? All right. So 2 demand levels imbalance. We're looking to take longs. We're currently in a little drawdown right now, but not to worry. I'm still very confident in this trade. Euro GBP. We had a very nice counter trend short trade yesterday because we can see some distribution that was occurring. Distribution. We had that final run, failed to make a higher high, right? And then we made the lower low breaking structure. Okay, so we closed below that structure. So that becomes our supply. Where are stops? Stops go here. Why not right here? And I talk about this in my YouTube videos. Why doesn't it just go here? It doesn't go there because this is the high that created this low. So technically, we could pull all the way back up 99% of the way into like this candle or this area of supply and still maintain bearish structure, which we are. This is a lower low. This is a lower high compared to this high. So that's why stops go above this high right there. So we had a little bit of drawdown, more than anticipated, to be quite honest. We rolled over to start London session. We pushed back up, mitigated some imbalance, and now we're continuing short. I probably will now put stop loss here. I will be moving stop loss above that high. So just mitigating a little bit of risk. The reason is because if we come all the way back up and take out this high, after creating another lower low, we're probably just going to go long because higher time frame, we still are in a bullish market. I want to be selling price down into our objective. Now, just because we have an objective, just because I want to buy price at 8684, right? This is where we swept liquidity, coming into demand, maintaining structure, faking out retail head and shoulders traders below the neckline, right back up, take their stops, right? Just because that's our area of interest doesn't mean we need to be placing random sell orders in here because we think that price has to come down into here, trying to catch both the move down and the move up. That is the retail mindset. That is the most ridiculous thing I've ever heard. You don't trade unless there is a setup. Straight up. Do not trade unless all your confluences are met. Treat each individual trade or treat each trade as its own. Okay. If there wasn't a valid setup, just because I think price could come down here doesn't make it 100% confirm that it will. Price could stop right here, react off this mini demand and go long. But if I sold it in here off of a random area because I didn't, do my proper due diligence, then I would have lost a trade and it's totally unnecessary. So you want to be building confluence for each and every trade. And in this case, there was confluence. There was distribution, breaks of structure. We had our supply. We also came into a mini time frame level of demand to the left where we reacted from. So that was just another confluence for me. Plus, we also had massive divergence here. Go to the VFI. We can see huge divergence. Huge sell-off in volume. Price continued to push up. Okay, so that was just another confluence for me. So looking to continue to short this. Euro JPY. We had a beautiful sell opportunity from 144. I don't know why the take profits are here. Should be down here. I don't know why it does that. You guys have the same problem? It's like you have a take profit and then you go to another chart and then you come back to the same chart and now that it's like reverted back to up here somewhere. I don't get why it does that. But anyways, it should be down here at 138. That's around 138. Anyways, this was our higher time frame objective. We came into that objective. We created liquidity. We failed to generate a higher high, and we made a lower low, breaking structure. So this is that supply level that failed to make a higher high, invalidating demand. So this is where we wanted to pull back up into. We did. We got a wick entry at 144 in really good profit. And then I said on the 15-minute, our counter trend, we swept descending liquidity, high, low, last buy to sell. Okay, we broke the counter trend structure, simple pullback up into our buying volume. You could have placed your entry right in here. This was probably the more valid level because high, low, failed to make a higher high, lower low. That was that intermediate supply zone. So we're in 2 trades at the moment, both in pretty good profit right now. Euro USD, I don't see anything on GA, just kind of consolidating around our level. GBP CAD, looking for further shorts on GCAD. We're currently in profit on this one. Notice this sponsored candle here. Look at that huge sponsor candle. We're still in trades from our original supply zone. Still in trades here. Still in profit here. Both stops to break even. This one, I'm moving stop above this high because if we come above this high, we're probably just going to go long. So mitigating risk here. Stops to break even here. Stops to break even there. Partials have been taken throughout these trades. Targeting 1.5. Sponsored candle. Huge buy to sell mitigation. That was our second trade. So it's just following the mitigation trade. We had supply in here, or really just this huge buy to sell on a lower time frame that swept liquidity. And then on a lower time frame, it's that push to the downside, that rally to the upside, failing to make a higher high, and we made that lower low. So that becomes that supply zone. So we sold it there, sent that to VIP a few weeks ago, and then we had the re-entry off the sponsor candle. Boom. And then on a lower time frame, you can see the break of structure here, lower low, generation of liquidity, create or push up to take the liquidity, supply zone reaction, equal lows now looking to fall. So hopefully the news doesn't spike up and come into our lower time frame supply level up here. If it does, I'm still looking to sell. So I'm looking to sell at 5268 if it does come higher. I hope it doesn't because I don't want to break even on this and I don't want to lose on this one. But if it does, then oh well, then I'll look at taking a trade here. Hopefully the news just uses the excuse to push price short. USD CAD. I really don't see much on it. It's just trickling to the upside. We had a beautiful sell trade that Aiden called out on the 8th of September. It was a lower time frame break confirmation liquidity run into our overall level of demand, which we had a buy from 1.2960. We're currently up at this current moment, almost a 1 to 8, floating 1 to 8. So I don't really see any re-entries on this. I mean, you could classify this as demand, small pullbacks for continuations into higher time frame objective 1.35. But if we get the overall pullback, then we may come into here, or we may come into imbalance in here. So either of those 3 levels will probably be valid if we get pullbacks. USD Swiss franc. I don't really see much in here. I'm looking for longs from demand in here. I think it's 15-minute maybe. 15-minute level of demand that swept liquidity, made a higher high. If we come any lower, then I have my lower level of demand or last sell to buy that came into our overall zone. So now we're looking at creating a higher high now, right? We're looking at making higher highs. Dollar is still quite bullish. So 9588, mark off that level, and 9546, I would mark off that level as well. NZD Swiss franc, I was hoping to get back up into this level here. We can see higher time frame we're bearish, right? You guys can see that easily. Lower low, lower high, lower low. Equal lows, lower high, fill imbalance, mitigate supply, fall. Asian range, fake out of the Asian low, entice breakout traders shorts. Push back to the upside, take their stops. Entice breakout traders long with these equal highs. Nope, right back to the downside. So now sellers and buyers are out of the market. Institutionally sponsored buying volume to sell off. This is our mitigation point. We wanted to trade from this level. Equal highs were created. I was hoping we would go run them to come up into our sell zone, but we never did. We rallied, but this is still valid because it's just market structure, higher time frame now. Lower low, lower high, lower low. Could have an overall pullback, lower high for a lower low. Simple trade. So still holding this limit, still very valid. So 5757, we'll call it. That's a round figure there. 5757, you can mark that off. GJ, I believe Aiden can talk about this one since that was his trade. Let's see. NJ, nothing much going on NJ right at the moment. I'm looking to sell from these two levels. Our higher time frame objective was met perfectly. We pulled back. We failed to generate a higher high. We made the lower low. Pulled back, but did not mitigate our supply zone. We made another lower low. So these two levels are still valid. However, we are still higher time frame bullish, meaning even though like on the daily and weekly time frame, this is our objective, we're still making higher highs and higher lows on the 4-hour time frame. So technically, we could make a higher low for another higher high, deeper into our objective, which is definitely possible coming into like 89 or 90, that price point. Okay, so when we swept liquidity back in August, equal lows, sell to buy, reprice, continue higher. Why is this the repricing? Well, look at the counter trend here. Boom, 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 boom. Reaction off of the supply. Failed to make a lower low, right? We stopped and made a higher high. So this supply is now invalidated, flips to demand. Boom. That's why we have that entry for that region of price that we're looking to take buys from, because it's simply just higher high, higher low at this point. We reacted off of our daily time frame zone when we came into liquidity. So we have equal lows again. So that's what we're looking to run. I think if we extend this over, we're creating even more liquidity here. 1 touch, 2 touch, 3 touches. How many retail traders are buying right here? A lot, because they're seeing this as support. Nope, I guarantee you this is going to be run. Whether it be run if we pull back first into our sell zones or if we come into our buy zones first. Key piece of advice here. Since we're technically still bullish, if we come into our buy zones and have a reaction, we are no longer looking to short from here because the objective has been met. If we break structure and then have an overall pullback, then yeah, these sell zones would still be valid. If we pull back first into one of these two levels and go short, these are still valid because we haven't come into objective yet. So if the news immediately pushes it up, I'm looking to short. But if we spike into this, obviously it would spike into my buy areas, and then we would go long, and then we would delete these. So you just have to understand, what's valid, what's invalid. Okay, so that's NJ. So mark off those levels, or just take a little quick picture with your phone or whatever. You're not going to want to miss out on these levels that I'm going over. I go over these every single live session. Aiden goes over them every single Smart Money Sundays. And in VIP, the daily market breakdown videos and all the analysis and updates. You guys don't want to miss it, I promise. They're just cake. It's just so easy. We had so many entries in here. I had one here, I had one here, and I had one here. Right there. And now we have one here. Overall take profit is 7-8. So we're in 4 positions at the moment. The reason is we know that we are higher time frame bearish. We came into a higher time frame level of mitigation. Huge sponsored move on the higher time frame. Big buy to sell, sweeping liquidity coming into supply. This supply was where we broke the counter trend structure. We failed to generate a higher high. We stopped, created a lower low. That turned supply. So that's why we had the mitigation from that particular level. So as we swept liquidity coming into that level, we distributed on a lower time frame into that level, confirming the trade. When we broke the distribution and it was confirmed, simply pulled back. I called this out in VIP as well, 8196. Same thing goes here. Asian range, fake out low, fake out high, come short. This is the institutionally sponsored buy volume to sell off. So that was the mitigation point at that level. Continuing lower low, lower high, lower low, lower high. Again, fake sweep of the low, fake sweep of the high, go short. Come back up into the supply zone, called that one out to VIP as well. Same thing here, counter trend, boom, failed to make a higher high, lower low, supply zone there. That's why we have the reactions. Guys, if you know the levels in which you're supposed to be reacting from, if you know these institutional levels, if you understand market manipulation and the proper liquidity runs, then you're going to get wick entries like this. Yes, this was not really a wick entry. This was. I mean, how many people can catch wick entries like this constantly and consistently? Probably not many people. Anyway, sell side liquidity was run. That was the conviction for the short. Or, even if I didn't have any confluence, well, first I wouldn't be taking the trade, but this is just added confluence. Why? Because we have all the confluences in here to short this, but the overall or secondary confluence would be to take sell side liquidity. We mitigate and then go attack liquidity again. Equal lows, equal lows. Take that liquidity, form this imbalance, failed to make a higher high after the mitigation, buy to sell volume, supply zone to the T met. Before that, what do? Generate liquidity. Happens all the time, guys. We come up, we fail to come into it. We rally, maybe go like this, entice sellers here, then whoop, right back to the upside. Sure, you may take some sell trades in here if it's valid, but what is this? This is just a lower time frame trend if this were to recur, but a higher time frame pullback. What is this? Higher time frame trend, pullback. Sure, right? It's just the fractality of the market. We just have to be able to understand higher and lower time frame structure and be able to put them together with one another to formulate our trades. So I had the reaction looking to sell down into 7-8, still holding this. Stops to break even, partials have been taken. AUD CAD, we're in a little bit of drawdown in the first position, but we were able to get a nice secondary position that Aiden called out here at 89386. This is within our last buy to sell that came into supply. We are still holding our 5 positions from, and that was just a big end of August. So 2 of them were the end of August, and then these 2 are beginning of September, I believe. 2 in here, this was where we distributed. We broke the distribution, came back up into where we started the distribution, and then this is a 4-hour candle, and this is our last supply zone. So they had those 2 levels, broke the counter trend, pulled back these 2 levels here, made another lower low, pulled back into supply there. That was 5th entry, had a few losses in there, but nonetheless, came back up in a little bit of drawdown on this one, but in profit on this one. So overall, a huge profit on ACAD collectively. All right, so looking for further shorts, we have a lot of sell side liquidity trend line to take, right? So if news comes out, I would hope that it would, just like that. So we'll see what happens. GN, very nice trade. I think I've already talked about our first entry on prior live session. We're still holding this one into 1.94, but the re-entry that was called out last week was, we can see 1, 2, 3, 4, 5 touches of this trend line. Retail reaction, they short it. Nope, they lose again. So we're just retesting their retest, essentially. Equal lows were formed prior. What else is this, guys? It's just so funny how this works. Retail, they're just stupid. Head and shoulders. Break below the neckline. They short. Nope, we buy. Thank you. 1.94, we're heading into that overall target. Re-entries on this, since we haven't hit our objective, if we can have a pullback now, I'm liking this level of demand. The reason for this is that lower low, lower high, lower low, lower high, failed to make a lower low, higher high. This is our demand level. Okay, looking for that re-entry there. Euro Chef. Oh, how many trades are in profit? A lot. Okay, so our first one that we talked about, I think I talked about this on Saturday's live session last week. Essentially what this was, obviously lower low, lower high. We're looking for another lower low, higher time frame. We came up into supply, swept equal highs, swept this high here, broke the structure, lower low. Now we're counter trend bearish and overall bearish. Okay, so we were originally hoping for, you can see this pullback, failed to make a higher high, lower low. This is our supply zone. We failed to come into that, and that's probably because, maybe it just had that small little retracement into this 4-hour buy to sell. But nonetheless, we were able to capitalize on the next move. Our last institutionally sponsored move, lower low, pulled back, failed to come into supply, lower low again. This is still a valid region. This is where many people go wrong. They're like, okay, well, we pulled back and then we made another lower low, so I'm going to go like this. Well, no, because this is our real valid region of supply, just as this is still a real valid region of supply. Low, lower high, lower low. This is just acting as liquidity right there to go and run, to then mitigate and then short off. So we had that beautiful entry there, targeting 1.95. And then after the reaction, we had a little tiny supply level here. We fell again, mini time frame level of supply there. So I'm like, okay, I'm going to take a trade short here and here for the lower time frame structure. Boom, boom, whoops. Boom, 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 boom in here or in here, one of those two levels. And we just so happened to respond from this level. I had a little bit of drawdown where it was in this trade longer than I had hoped, kind of just choppiness, but oh well, you know, we maintained our structure and now we're going short, equal lows, more sell side liquidity looking to continue to follow through into 9.5. So this would be a almost 1 to 4, and this one would be a 1 to 5. So about 9% return on just those trades alone. But the reason why I still had this level in here was because, you know, really this was the structure. So we didn't make a lower low until we were in here, right? Because we never closed below this prior swing point. So when we made the lower low, it was right here. Well, really right here now, because that's where we started to pull back. But anyways, this is the high that created this low. So I figured, okay, well, we may come into this one and not retrace fully and then short off, which we did, which is why we still have this entry. But secondly, we could come a little bit further up into lower time frame supply, fill in balance, and still maintain our structure short. So that's why I had those two levels. Also, if we had the overall pullback, because what did we do? We generated the lower low, right? We closed below it. Now, what does that mean? We have the possibility to have the overall pullback into our higher time frame supply, because simply what is this? Trend, break of structure, right? But we're not going long. We're not pulling back to go long, right? Because we're bearish. So what is this? This is just a lower time frame trend, but a higher time frame retracement. Same thing here. Once we create the overall lower low again, this is simply just a lower time frame trend that we can still react from and continue to short. However, we have to take into consideration that we've made a higher time frame lower low, so we could have an overall pullback. Doesn't mean we're going to go bullish. It just means that we're going to retrace higher time frame, come into, you know, our higher time frame supply zone in here, right, and then look to short. So that was always a possibility, so I had that open as well. But it's looking like we're going to hit 9.5 now and then take me out of both trades. So very good there. I know there wasn't many setups. I hope you guys marked off the levels I told you to. Not a lot is setting up, but you know, we do have a lot of current trades that are open and are floating in really good profit at the moment. Let's see what else we have here. Uzbekistan. Oh, I like it. Morristown, New Jersey. Oh, no, not New Jersey. NJ. Sorry. NJ, Chef J. Yeah, went over those. Oil. I don't trade commodities, guys.
Where is Morristown? Is that PA? I don't remember.
Can you please give an idea about gold? One, I don't give out ideas just to give out ideas. I give out ideas if there's actual setups. I don't trade the market just to trade it. And two, I don't trade commodities. So I like to specialize, guys. If you specialize in something, you're going to be a lot better at it. If you diversify and trade everything, you're not going to know how everything moves. Therefore, you're not going to be good at everything. Therefore, you're just going to lose money. I would stick to just a few things. If you like gold, stick to gold. If you like, you know, US 30, stick to US 30. If you like Forex, stick to Forex. Specialize in something, get to know what you're trading and become masters at it. You don't need to diversify and trade a million different things. You really don't need to do that. It's just going to cause so many losses on your end.
Yeah.
I only trade Forex, so please don't ask me to go over anything else. Are you setting limit orders for most of these trades? Yes, I am. I would say 99% of them I'm setting limit orders. Good question. GN. Yeah, went over GN. How do you take partial profit? I think you were the one who asked me that question last time as well. But I guess if you forgot, I can go over it again really fast. So how I take partials. Where do I look for price to reverse against me? That's where I'm looking to take partials. So if I'm shorting here, for instance, where could price go against me? Well, let's just say, for instance, that this was the bottom in the market. Okay. So this was an actual higher high. Let's just call it an actual higher high. We've broken structure. So just in case price goes like that and we fail to make a lower low and we make a higher high, where could price come into? Well, price could come into really anything in here, anything in here, maybe sweep liquidity there. So I would take partials right here around psychological level 0.95, 0.96, excuse me. So right in there, that psych level, because that would be the discount in which if buyers came into the market and the market actually shifted, that would probably be the area in which it goes long from. So you need to be taking partials where you think the market could go against you. If there's nothing stopping price, which really in all reality, there was nothing stopping it, but it's always good to take partials, right? If this was just low resistance liquidity and just it trickles like that, and you got into a sell trade and we're overall bearish, well, there's nothing stopping price in here. That way you can hold your take profit until you're way down here. And then after that, you look for your higher time frame levels. Where could we reverse from? 0.95, well, that's a psychological level. If we zoom out, I mean, there's really nothing stopping it. You know, we broke below the higher time frame low back in 2015. We could easily just collapse here. But in that case, if there's nothing to play off of, I just go based upon psych levels. But let's just say there's a huge like demand in here. I'm just going to make this up. Huge demand in here and a huge demand in here and a psych level here. Well, if I'm shorting from here, I would place a take profit there, a take profit here, and a take profit there, right? Because these are the highly probable or highest probable levels that the price could come into and reverse and hit my stop loss, right? So that's where we need to be taking partials, if that makes sense. So it's not going to be like, oh, I have 3 partial profits every time or 4 partial profits every time. It's all dependent upon the trade. How many areas of interest could price come into before actually reversing from my trade? Most likely it's not going to, but there's always a possibility, right? So, for instance, I think I may have mentioned something on, actually, I don't remember what pair it was, but yeah, I would just follow that advice. That will definitely help you. Hopefully that helps. Oh yeah, Aiden, did you have any pairs? Sorry, I didn't even ask you.
Not really. Outside of what you already touched upon, I can see here.
Guys, I also created a video yesterday. I'm going to be posting it here. I believe Cam might be posting it to his channel as well, but I'm going to post it to my YouTube. It is a video going over a full audit of my VIP Discord channel. There are so many people out there claiming to do 50% return a month and having these $10,000, $100,000 profits. And I look at that and I just laugh because it's all fake. If these people are doing it consistently, they're not in the comment section going against every single negative comment. They don't care because they're wealthy. If they were actually wealthy trading like that, they wouldn't be doing it. There's so many Forex scammers out there, so many cappers, or whatever you want to call them, so many liars, so many fake profits, so many fake trades. It's getting ridiculous. So I decided to show you what it's like to actually really trade. So I provided a full audit of all of the trades I've sent in our Discord channel. It's about 2-hour long video, but it goes over everything, all the winners, all the losers, full analysis on everything, to give you guys a full transparent view of what it's like to actually be a part of something that is real. If you're hesitant about joining some group and if they show you $10,000 profit, they're probably just lying to try to get you in the group, right? We don't do that. I don't show you guys my account balance or my profits. I did that once for my prop firms, but that's about it because I don't need that. We don't show lifestyle that often. But we don't need to. We just trade. So once I post that video, I would definitely recommend watching it. It'll definitely be an eye-opener. But just wanted to provide transparency for the lack thereof in this industry. Sorry, Aiden, go ahead.
Yeah, no, can you see screen? This is the setup that I gave out to our VIP members last night in our daily market breakdown video. Simple setup on GJ. Simply following this lower time frame market structure, obviously higher highs, higher lows, higher highs, higher lows. And once price trades into demand here, as you can see, we have the reaction, but we fail to then create that higher high in the sequence. And we then break down in market structure, taking out this low. So this demand then flips to supply. I mentioned we should simply just be looking to target this old low or just below it. And so as you can see, we trade up into that prior demand flip to supply, have a beautiful immediate reaction and run through that old low, and hence why we're now seeing that push higher, right? We've met this liquidity objective, the liquidity resting beneath this low, and now it's time to turn to another objective. So very simple kind of 1 to 3 setup. That's really the minimum risk to reward that I'll take is a 1 to 3 if it's a layup setup, right? I prefer 1 to 5 as a minimum, but if it's a layup, I'll still take that 1 to 3, and that's why I gave it out to our members last night. So if you're a member and obviously paying attention to the daily market breakdown videos that we post every single day, congrats if you took this trade and caught that move. It's really all that I personally look to take is layup setups. There's a whole lot less stress and emotions involved when you're simply taking layup setups that you know work for you time and time again. Of course, you're still gonna take losses because we don't have a crystal ball. We're not magicians. We're not perfect, but you remove a lot of that psychological burden out of the equation when you simply take the layup setups that you know work and you can just simply rinse and repeat. So that I know someone had mentioned GJ. In terms of the here and now, I'm kind of staying away from this now that we've taken some profit out of this particular market, and just going to wait and kind of see how FOMC, manipulates this particular market. Likely, what often happens, guys, is lots of setups will present themselves after the news event. So you kind of just have to be patient, and the news event can give us that more or less overall kind of paradigm and sentiment for the coming weeks. So there's no need to rush, no need to feel like you have to be in a trade prior to the news. Although if there is a technical setup that makes sense, then, as we always mention, news is just the excuse to move price. So there's no need to get scared in that regard. But that's GJ. I think, Nate, you discussed Euro GBP, if I'm not mistaken. I'm personally simply just looking for an overall retracement, right? Following this lower time frame structure, higher high, higher low, higher high, higher low, higher high, simply looking for another higher low in discount and targeting 8850. Why am I targeting 8850? Well, if you actually zoom out higher time frame, right? And this is the daily time frame, what you can see is the break in market structure, the higher high, the higher low, the expansionary move, higher high, obviously higher time frame retracement into discount, higher low. So what I like to do in this instance is take the higher time frame fib, right, and use that -27 as our kind of overall objective, right? And that brings us into that round number 8850, where then I can target with my lower time frame trading, right? And this is that lower time frame daily candlestick, also that 8-hour kind of 4-hour level of discount and demand where we could very easily see a simple continuation trade. All right, so that brings us into kind of 8650 into kind of 8680 as that kind of buy zone where we're looking for those continuation trades up into 8850. So this looks very simple, very straightforward to me. I'd personally be happy to take risk at these levels of discount. Let's see. Is there anything else? I don't think there was that you didn't touch upon. UJ, I know someone had mentioned that one as well. We talked about this in my Smart Money Sundays video, which if you're new to our live sessions or our YouTube, we post Smart Money Sundays. I post it every Sunday before market open, kind of detailing on a higher time frame exactly what I'm expecting to happen on a macro perspective on the week ahead and kind of give you guys some POIs. This was that POI on UJ, that 30-minute inefficiency that we have not met yet. And we also had a secondary level just in case price did end up running this most recent low. This was that secondary level, right? But we have a nice strong liquidity with these relative equal highs. So within a market uptrend, right, when we have that enduring uptrend in a market and we have clean equal highs, that's very good confidence and conviction behind the fact that we're going to continue with that overall trend and run out these equal highs, right? And so what I'd like to see still, right, if we can leave these equal highs intact, is simply, is for price to make that run lower, right? That manipulative push lower first, running out this kind of range liquidity, either into POI 1 or POI 2, and then seeing that overall push higher through these equal highs as the draw on liquidity. All right, so that's UJ. Again, we understand that we're in an uptrend. We understand we have equal highs, but just because price is pushing higher now doesn't mean you should chase it, because you think it's just going to go ahead and run these out. Right? That's when you'll get trapped. You can't fall victim to the noise that's in between the levels that we understand to be truly valid levels, right? And so, we remain patient, right, and wait for price to trade into either of our levels so that we can then get the proper entry price to seek out the liquidity resting above those highs. Right, so that's UJ. It's just kind of chopping at the moment. And I think that is all, Nate. So you touched on some of these majors. Obviously, Euro AUD, I think you also touched upon. Kind of similar to Euro GBP, right? It's very similar. Simply following that lower time frame structure. Was actually a 4-hour structure now, that bullish structure to the upside. Looking at that discount, 1.4800 is really that POI. So let's see if we can get that discount for the continuation, seek out this liquidity, buy-side liquidity. All right, but I think that is all that I have. I guess I'll flip it back, see if there's any other questions that we might answer. See what else you guys want to discuss.
Let's see what else we have, guys. The pairs that we went over, if you've been on our live sessions before, I always say the pairs that I go over are the pairs that I like, that I have setups on, that I want to talk about. All the pairs that you don't hear me go over, I'm not going to go over. And it's not me just, being mean. It's just me saying I don't see anything on them, so that I wouldn't be providing you with any value. So that's really all the pairs that we had today, guys. So if you don't have any questions, you are all good to go. But if you are interested in really learning this skill and doing it yourself and being able to, whatever it may be, quit your job, get funded, which is, we have a lot of people getting funded recently. Head over to our website, arielfxtrading.com, book a free call with us. We'd love to speak with you in regards to your goals, see how we can help you and get you to where you want to be. Because if you keep going through the same cycle of, losing and trying to do it on your own and losing and blowing accounts over and over and over again, and it's taking years and years or months and months to really become profitable, you got to do something different. You got to get the help you need, and it may not even be us. It could be someone else, but, utilize a mentor, learn from their mistakes, learn from what they know is correct. So I would just book a call with us. Even if you don't end up joining, we would love to speak with you to see if you are the right fit for us, but also if we're the right fit for you. We may not be, and you'll never know unless you book a call. Plus, you get our free our trading plan for free and our free beginner's course just for booking a call. So would recommend doing that. Let's see what else questions we have. Do you recommend holding positions over the weekend? I don't see why not. I mean, yeah, absolutely. I mean, if price hasn't come into objective or hasn't hit your take profit, I mean, you had your take profit there for a reason, right? So
exactly.
Yeah, I would keep holding. The CAD-J sells off the table now. I'm going to watch it carefully. If we have a strong reaction from where we're reacting now and we start pushing up, then yes, it would be off the table, because then we probably make a higher high. But I'm going to see. I'm going to just, I'll keep you guys updated on that for those of you who are in VIP. See EA flying. Let me check out EA real quick. Yeah, so what this could be, and Aiden had his level down here, which is definitely still valid. That's definitely a region. We also have lower time frame imbalance, so we could definitely come lower. However, if we do have the reaction from this, intra trend or in the middle of the trend demand, just to sweep this liquidity, which we did, we could easily go long now. Why? Because what are retail traders doing? They're losing in 3 ways. They're losing because they're buying off of support, right? So they're placing their stops below here. So boom, they run their stop loss. Next, price comes lower, breaks the support. The breakout traders come into the market. They look to short when price breaks. They lose when price goes long. Next, support, break and retest. We're seeing the break and retest now. Now they're shorting in here. Now we can go long and take their stops again. So retail loses all across the board.
Yeah, that buy side liquidity looks phenomenal.
Yeah, that buy side liquidity and then this buy side liquidity here.
Yeah. All of that is right to get destroyed. So if this level breaches, then we have our second level, which is perfectly fine. If you lose one trade at 0.5% and win the next one at, 1 to 5, then, it's net profit.
Yeah, exactly. And same thing in here, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high. That's what we're looking for. It's just market structure, but introducing liquidity and institutional concepts within the structure point, but understanding the lower and higher time frame structure. What if you had something like this? We're interested in this area of supply in here, right? For potential shorts, not to say it's going to, but potential shorts. So what if a trader is looking at this and a price goes like this and comes into this level, goes like that, sell, and they have a demand level here. Do you think they're going to buy it off of that? They probably will, but the problem is it could easily go like that. Why? Because they didn't take into consideration higher time frame levels. They're so focused on this lower time frame that they place their buy entries after the objective's already been met. Right? That's why a lot of retail, or I wouldn't say retail, but just any traders lose because they don't know the different levels across the board. If you can put together all the pieces of the puzzle, trading is so much easier. But it requires a lot of learning and education in order to do that in practice. So the objective is in here. There is a high probable chance that we're going to come up into that objective, just anywhere up into here. Okay. So we still have room to go, meaning any buys that we have in here are still very much valid. If we already came up into here and then we had this set up, then I would be hesitant. So, same thing in here, right? There is within market structure, we have demand in here. We have demand in here. And then there's lower time frame demand, which is right there, which we reacted from. So these 2 levels could have been your levels in which you take buys from. Understanding that if we don't have a reaction here, which we didn't, we could come into the overall level and then keep going up. What if we just had a smaller retracement? Well, you could get it off maybe half risk here, look to buy it. And if it goes long off of the continuation of this mini trend here, then you could catch that move. But if we have the overall pullback, then we know that between that low and this high that produced the range, we could get a deeper retracement, which is exactly what we're looking for here. So that's why we have 2 levels, because we have 2 valid levels of demand in here. And notice how, when we sweep liquidity, we usually do it very quickly. So these equal lows could be swept very quickly and then we go, right? Which is why I like this level here. But if we come lower, fine, we still have our secondary level. And it's looking like I'm not going to say anything now because it could easily turn around, but it's looking like we could go long now. All right, what else do we have, guys? Just a few more minutes and then we're going to hop off for the day. Discord link. Yeah, I can post that again.
Post the website to the YouTube. If you guys haven't subscribed to our YouTube, please do. Ariel Fx, same name as my name on the screen.
Yep.
Lots of content posted there as well. Chad Wick from Portland, appreciate it, bro. If that's your real name, that's...
Yeah, I was about to say it's a pretty cool name.
If that's your real name, I'm jealous.
Yeah. You adjust your level of risk based on number of levels it could run into. Yes, good question. Beautiful question. Absolutely. So let's just say, for instance, I have two levels of potential profit target, right? I have one level and then my overall level. If I'm risking 1%, I split up my risk. 0.5% risk at the same entry level and 0.5% risk at the exact same entry level, having different take profits, because if I lose the trade, I'm only losing 1%. But I can split up the risk to say, okay, well, if price comes down, let's say I'm selling, comes down and hits my first profit target, now I'm out of that trade and I could be sleeping and not seeing that it actually hit it. Because many people will try to take partials manually, and then maybe they wake up or are busy, and then they come back to the charts. It hits their take profit, but they get out at a worse price because they didn't place it. They didn't set their own take profit. They took profit manually. So yes, if I have 3 take profit levels, then I'll set 3 different positions. So if I'm risking 1%, a third of risk there, third risk there, and a third risk there again, each at different take profits, if that makes sense. So yes, definitely a good question. I'd like to know where you place your stop, at the bottom, the blue box, or structure. All right, very quickly, I can go over that. It's different for every trade, guys. But good question, though. For instance, here, where would I be placing stop? In this case, yes, I would be placing stop here, because if I had my entry there and my stop down here, that's a huge, huge stop loss compared to the reward that I would get with that. That'd be like a 1 to 1.5, and that's just not enough. So that's why in this case, I would place my stop here. But if we come down into this region, I would place my stop here. So it just gives me better risk to rewards. But something like, I don't know, what's another one that I had that I talked about earlier? I don't remember. Anyways, let's just say that my take profit was all the way up here. Okay, all the way up here maybe, and I had a huge risk to reward on this. So even if my stop was down there, my take profit was all the way up there, and if I have a good enough risk to reward, then I'll definitely put stop below the structure, even though you could place it below here, because I still have the risk to reward that I need. So the stop loss is all dependent upon risk to rewards. Obviously, it has to be at an appropriate position, but if I have a high enough risk to reward, even if placing my entry here and my stop here, I'll do it. But if I don't, which I don't, because I'm only targeting 1.51, so right there, that would be, not even a 1 to 2. So that wouldn't be good enough for me. So I'd have to place my stop here. And then if I lose that at a 1 to 5, fine, I lose 0.5%, because I'm treating this as one trade. 0.5%, 0.5%, because if the price just collapses, then I only lose 1% total. So 0.5% here, then stop can go below the low, and now 1.51 is right there. It's a 1 to 5.4 again. So if I lose this one and win this one, I'm still net profit overall by a factor of like 5. So it's 1 to 5 on each. So that's how you can do it. That's how I would recommend doing it. Good questions, guys. Good questions. EA daily time frame appears to be exhausted. Still going long regardless of that? Yeah. I mean, we're still bullish. Why wouldn't we be going long? Have we come up into a higher time frame supply zone yet? Not yet. See, we have to understand. See, these are the types of questions that I like, because this is going to help you guys a lot in your trading. So Euro AUD, right? I think that was the pair. We haven't come up into our objective point. This is why it's so important to understand objectives, because if you don't understand objectives, then just like you said, you would think, oh, well, we're exhausted to the upside. We need to be looking for shorts. We haven't come into objective yet. We're still going to go long, most likely. High probability chance that we will, because we haven't mitigated this supply zone. Why is the supply? Lower low, lower high, lower low, overall pullback. Last run before the break of structure, before we started the lower low sequence again. So now we're just pulling back. This is our last buy to sell. So that was our supply zone. So lower time frame, I can be buying up into this level, knowing that we haven't reached it yet. So it's not quite over exhausted. It looks like it, but we still have so much confluence for pushes up into at least 1.51, maybe even up to the 1.52 or 53. So definitely we're looking to still go long. This is where not a lot of mentors help you guys out, because they don't understand objective. They don't understand the narrative. It's so important to not only have a good strategy to get your right entries, but if you don't know where to place your stops and have your take profits or understanding objectives, doesn't matter how good you are at your strategy, you're still not going to make as much money as you could be making. So it's so important to have the overall understanding of everything. That's what makes you jump from an amateur to a professional. Let's see, aside waiting for price to get back to premium, other things making areas stand out for you, price reach towards. Clarify what makes it specific. OB, fair value gap and stick out to you. Well, I'm just going based upon structure. This is a question that is going to be very difficult for me to answer just talking here on this live session. I would watch my YouTube videos. I mean, heck, the course goes over it in depth. It will answer all your questions, but there's so much that goes into it. So I could give you like a brief explanation, but it wouldn't really help you that much because there's so many different situations and scenarios that I look for. It's all dependent upon the different setup that forms. So it would just be too hard for me to answer that question. Please analyze NZD-CAD. Yeah, I already analyzed NZD-CAD earlier. So just go back and watch the recording. Yeah, sorry, Chad. It's going to be very hard for me to answer that question and give you a really good, valuable answer.
What makes this specific stick out?
Yeah.
We have, I mean, if you don't have our trading plan kind of designates rules for sponsor candles and what makes one valid. So,
yeah, Chad, if you hit me up on social media, I can give you our trading plan. Yeah, and exactly. Every pair does have a different personality. That's true. But it's the overall concept that works. Now, every pair trade or moves differently, but it's the concept that is the same. Which is why we're able to take these complex concepts and really dummy it down to something that you can really understand. And that's why we're smart money traders, but we present information to our clients and to people learning to trade smart money very simplistically, which is why a lot of people enjoy.
That's content. The key. It does not have to be convoluted or over complex. It shouldn't be. And it's just more a recipe for you to get inside your own head, and it'll just never make sense, and it'll just frustrate you. It does not have to be difficult. It's a very simple, simplistic approach to smart money concepts that we teach, which is why a lot of people truly do find value with it, because there's so much information overload out there and just a bunch of garbage that you don't need to know in order to be profitable or consistent.
Yep. OB that takes liquidity is big. Yes. Yep, definitely. Huge. All right, cool, guys. Any last questions before we head out for the day? Let's see. It's a reminder for a couple updates. So our psychology course, that will be, so if you guys are already a part of our exclusive mentorship program, those of you who are currently, have our, all-inclusive program package, you guys are going to be getting this course for free. It's just a perk of being in the program. That will be released, I want to say at this point, probably mid to late October. I was aiming for early October or late September, but I think I want to add a few more things in that would provide some value. So I'm going to just push it back a little bit by maybe about a month. So, once that comes out, you guys will be getting that for free. Those of you who are not currently in VIP and wish to learn more, if you join at the current price now, you're going to be getting everything else, every other piece of content or course or whatever for free as well. So definitely recommend doing that if you want to really learn smart money and become overall, profitable in that regard. Also, the competition, so the trading challenge, we are no longer accepting any new attendees. So there's about 50, 60 people that are currently doing it. I'll be posting the leaderboard this weekend. That will end on the 12th of October, and I will announce the winners that Saturday's live session. Let's see what else. I'm mistaking anything. Oh yeah, that video I talked about that I created yesterday. The video doing a complete audit of my whole entire VIP trading. Many people come up to me and it's like, dude, there's no way you're catching all these entries. How are you lying? I'm like, but I'm not lying to you guys. Like I'm posting it to the VIP so they can attest to everything I post. So I literally do a full breakdown here. I'll even show you really quick, really fast, of what this looks like. Like, this is the entire channel. We're posting these videos every single day, these areas of interest all the time, looking to, just help you learn, but also take these trades with us. Areas of interest, literally everything you can think of. I go all the way back up until September 1st, so the start of the month. There's about like 50 to 60 pieces of analysis here. This is the 12th. I could go all the way back up, but I start on September 1st and I just go down the list and I go over each piece of analysis, the befores and afters. So for instance, some of these were talked about on the videos and some of these were just updates, but like a before could have been something like that, right? Or a before could have been something like, let's see, well, these are all just updates, something like this, right? And I go over all the after. So it's fully transparent. You can see that the date there. So I know that I can't like finesse any of this stuff, but it's just providing you a full transparent view of everything that goes along in our program to really show you that if you're wanting to really learn the material the right way and be with a group that really cares for your education, then, you got to find people who are, very transparent. So hopefully that video helps. Also, it's a learning experience as well. I think we did, let me see what I had. With all the wins, losses, partials taken, 59.6% since September 1st. All posted in the channels and talked about within the live sessions, Smart Money Sundays, and daily market breakdown videos. Let's see.
Yes, sir.
English don't speak very well, so I have been booking a call from you. Yeah, that's fine. I mean, that's okay. We can definitely work around that. Rue, is that your name? R-U-I? We can definitely work around that. That's fine. We still figure it out. Best mentors. Appreciate it, guys. Thanks for all the love. Any questions you guys have after the live, just feel free to hit me up. I'll be happy to help you guys. If you want to join the free Discord, I posted that a little while ago. We send out free analysis on occasion. Please go through CAD Chef. Did I talk about CAD Chef? Let me see. I think I did. Or no, I didn't. I didn't talk about it, but there's nothing on it at the moment.
So melting.
Yeah.
I'm going to drop our Telegram. It's our easiest mode of communication. So if you guys have any questions or want to chat with us, our Telegram is the easiest at Ariel Fx Trading.
Yep, there we go. Yeah, and then just check out our YouTube. It's all for free. Very valuable videos. Just search Ariel Fx on YouTube. You can go through our whole series. I'm sure you'll learn a lot. I'll even post the website as well if you want to take a deeper dive. There you go. All right, perfect. All right, next live session will be Saturday morning, 10 a.m. Eastern. Obviously, if you're unable to make any of these lives, the recordings will be posted thereafter. But definitely keep up with this stuff, guys. You're not going to want to miss out on these levels that we're presenting. Those of you who are in VIP, even if you just take everything that we send as signals, even though we don't want you to do that because we want you to really learn, and that's our overall goal. But even if you just did that, 59.6% in 3 weeks, just following our trades. I don't know. Can't really say much after that.
I enjoyed this session. It was a good one, guys.
Yeah, I really do appreciate you guys getting on with us. Thanks for taking the time.
Yep, and stay tuned for FOMC.
Yep, 2 o'clock Eastern, so a little under 5 hours from now. Going to be some crazy volatility, but hopefully the volatility will be the catalyst to hit some of our levels. If they're valid levels, they will react. New to trading, and I get this. Yes, let's go. Good. I'm glad. I'm very glad that you understand.
That's the goal.
Even at a basic level. It's really good. All right, Aiden, you have anything else for us? I think we're just about good.
Well, all set on my end. So I appreciate you guys more than you know, and we'll chat again soon.
Yeah, thank you guys for your time. The recording have been posted to will be posted to the Trading Net YouTube channel. All right, take care, guys. Talk later.
Cheers.